Governor Raghuram Rajan is joining us all the way from Switzerland. Governor Rajan, what's your first reaction to Brexit? Is this just a start and we should be prepared for more vociferous tendencies in Europe as well?
Well, I hope not. It certainly is a shock. I think with the polls going the way they were, but I think all of us sneakily suspected that the polls that we were getting didn't reflect true intent, including whether people would actually show up to vote, and as a result, we might be confronted with this. I think that hopefully, saner minds prevail as we look back on this episode, and in different countries, people see the costs of leaving, and therefore the vociferous tendencies you talked about get diminished. But since it also reflects a public mood, it is something we have to pay attention to. It reflects a mood of people who are tired of globalization, who are tired of engaging with the world, who are tired of immigrants, and that can mean a big change in the post-war situation where a lot of prosperity was built on free trade and free movement of people.
Okay, but Governor, immediately what's the sense? Cameroon has been speaking about imminent recession in the UK. That can't be ignored. That's at least something where you can't bet, but that's a definite scenario.
Well, so one of the things that has been happening is investment in the United Kingdom has been slowing because people are worried about whether the United Kingdom will continue to be part of the Eurozone. And I should say the European Union. But I think immediately what happens is the pound, which has already depreciated significantly, reflecting the fact that the UK runs a large current account deficit, and with trade now being called into question a little bit, there will be some concerns about how it will manage that current account deficit. And then as a consequence, if you don't want inflation perking up tremendously, there may have to be some monetary policy reaction on the part of the Bank of England. So these are the kinds of concerns that people have, a drop in investment, perhaps, and I'm just putting this out as a possibility, tighter monetary policy on the part of the Bank of England. Put it all together, and you don't have a very attractive recipe for the United Kingdom in the short run. Now, they have to get into negotiations. What this also does to the political establishment in the United Kingdom is obviously anybody's guess. But also how long the negotiations take and what kinds of opt-outs, opt-ins actually happen. Those are some of the things that market analysts will be paying attention to, and certainly we are also.
What odds are you placing on a European recession? I mean, we all know the vociferous tendencies out there. The Danes and the Dutch have been asking for referendum. The separatist parties in Italy and Spain have been gaining weight. And not to speak of the brightening chances of separatist parties in France as well. So, I mean, can all these be ignored now? Won't they get more fodder?
Well, they're there in place. So I think, one way of seeing the referendum right now is that it reflects a mood that already is there. Now, does it mean that mood translates into political action, which means more breakaway, more restrictions on trade, and so on? That we have to wait and see. Immediately in the euro area, you've seen the euro actually depreciating against the dollar, and the dollar strengthening. That may short run be, a silver lining. But I think in general, yes, this is, not good news for economic growth.
You know, the previous crisis that we all want to hark back to is the Lehman crisis. But that was still a financial crisis. Central bankers had to deal with it. But this is a political crisis. political class has to deal with it, and there the wounds run deep and solutions are not as immediate as printing notes or cutting rates. So do you think that we are going to have a longish fallout of this event, the Brexit event?
I think that's a good way of looking at it, that it's not an immediate liquidity shock that goes through the entire system. Again, we're watching markets to make sure there aren't any such shocks that permeate. But it's more of a slow-burning change reflected in this referendum. And that change will affect economies fairly deeply if it goes through. Now, that said, I think we'll also see political reactions in the opposite direction as people, discover what the costs are of this kind of breakaway. And so it may be that over time we have a more moderate, muted change than certainly seems to be reflected today.
You're a long watcher of Europe. Several times in the past, people have written off the euro's chances or at least diminished them. Do you think this is euro's biggest challenge now?
I think it's one of the big challenges. One could argue that Greece was a huge challenge, and when Spain and Italy were also, the spreads were widening considerably. That was also a challenge. So, the euro sort of project has been buffeted a lot in recent years. This is one more buffet, and I think they will figure out ways. They are used to fairly dramatic events.
But do central bankers have a role here at all?
I think central bankers have played the role of calming markets and certainly providing liquidity in the short run, and if necessary, if warranted, accommodation. And you saw that certainly in the Lehman, and I don't want to equate the two. They are fairly different events, but they did provide a lot of accommodation in the Lehman event. Let us see how things proceed. It's still very early. We're still getting, instantaneous market reactions. But let us see. I think we're all watching all the markets, watching all the prices, and trying to guess where the points of stress are.
Governor Rajan, good morning. First, we saw the Japanese central bank's action leading to a fairly significant devaluation of the Japanese yen. Today, the pound is down 10%. Do you foresee a situation where this kind of triggered devaluation of global currencies, followed by maybe competitive devaluation as well, can lead us to a potentially fragile and dangerous situation in the global financial markets and even global economies?
Well, I think this is broadly what I have been worried about for the last year and a half too, and I have been fairly public about this concern. Now, I don't think anybody would argue that Britain engineered Brexit in order to depreciate the pound. It's a consequence of this mass movement. So, but I think these have consequences across the world. I think the Japanese yen has appreciated significantly today, and I'm sure the Japanese authorities will be worrying about what that means. So currencies do help adjustment, and I think some movement in currencies is warranted. What I have been concerned about is intervention in a big way in the currency so as to move it in a particular direction and create a competitive advantage. That we will, as central bankers, have to get together and make sure that we don't do it.
In the light of these extraordinary movements in global currencies, which puts the rupee at risk as well, would you reconsider your decision to step down in September?
Look, I don't think you should ask me that question. Let me, I think, just reiterate that the Reserve Bank is watching all the markets. is being very ready to act when there is disorderly conduct, disorderly behavior of the markets. Of course, the markets that concern us most are the bond markets, the currency markets, as well as the money markets. And we are prepared to act if necessary. I think we should have put out a statement already, if not in the very short run. And that's basically it.
But Governor Rajan, just about 4 months back, even in January, there was very big talk about of a global recession, and we saw China jitters coming from China as well. Now, do you think that looks more imminent? The talk of or the fears of a global recession, a European recession, will start, becoming a reality that markets will start discounting.
Well, look, I think if you want to be gloomy, you can add a whole string of bad events together, right? Ranging from, what you call the fissiparous tendencies in Europe, some, potential for recession in the UK, and then, going on to a shutting down of trade, or at least more constraints on trade, and thereby more pain in export-oriented economies like Taiwan, Korea, China, and consequently a significant downturn in the world economy. Now, my sense is, and I keep saying this, that this sequence of events need not play out, and that some discussion, some bargaining, some political action could offset this. It need not be one to another like a set of dominoes. So I'm hopeful. I think it's very early days. We shouldn't overforecast what will happen. Clearly, markets are reacting, but let us wait and see.
The previous crises that we were used to were largely financial crises, at best banking crises. They have not been challenges to globalization like we see now. This is perhaps the first major challenge to globalization. So is this a long-drawn recovery that we have to wait for, long before markets heal?
No. So I would agree with you that the financial crisis was much more on the health of the financial system, and this is more on the health of the global economy. And to some extent, I think it's a window into how people are thinking in some countries. The referendum reflects the degree of anger with the current system. On the other hand, I think that as we see the consequences to the United Kingdom, it may well be that other countries where there is this kind of groundswell, they reflect on the economic consequences and step back from taking dramatic action. We rediscover the virtues of the free trading system that we have across the world.
So, but you are at the moment in Switzerland. Are you getting a sense that the political left, or well, maybe left or centrist forces are regrouping? Or at the moment, does it look like, for the moment, it will be the right or it will be the separatist that will first have their play before the centrist forces or the other forces regroup?
Too early to tell. I mean, I've got off a plane and I'm in a hotel room, so I'm not. I will have to go down and talk to my fellow central bankers. But look, I think the general sense has to be that we will reflect on this dramatic event, and I think you will see reactions from across the world. And so let's see how it plays out. Early days yet. Important that no one panic. I think we will figure it out.
But at the moment, the yuan is a pegged currency. It is pegged to the yen and to the euro and to the pound. It's 13 currencies. So if those currencies devalue so much, then we have to expect a domino reaction in the renminbi as well, mustn't we? And we know what pell-mell that led to in January and before that in June, July.
Well, they've said they're pegged to a basket, and that basket has components, some of which have strengthened, some of which have weakened. Remember, the yen has strengthened while the pound has weakened. I am, not familiar with the details of the basket, but in general, I think, the sense that they would move the renminbi was established starting August last year. So we shouldn't be overly concerned that it will move. After all, so many other currencies are also moving. So I don't think that by itself will be a huge new event. We have to see how these things play out.
No, but Governor, you drew a parallel to the Greek vote. Now, this one is happening at the center, possibly the leaders of the global economy. Isn't this even more dangerous, therefore? And London is the financial city, and that's where the revolt has come for globalization or against globalization. So therefore, should we take this even more seriously than the Greek vote or previous such crises?
Of course, the UK economy is one of the biggest economies in the world. And the implications also, because it's tied to the Eurozone and to the European Union, are significantly greater than if some small country was in dire straits and near defaulting on its debt. I'm not trying to minimize the impact of what has just happened. All I'm saying is that one doesn't extrapolate from this in a straight line into the set of dominoes that will fall. Instead, one looks at this and says, okay, now that this has happened, let us see how it plays out. Let us see whether other places become copycats, or they recognize the costs and back away from where they were trending earlier. Mm-hmm. So I think we have to wait and see. And I hope that the reactions will not be all uniform and say, yes, us also.
Well, Governor, you're even more a close watcher of the US economy and the US polity. Now, with this kind of a vote from Brexit and possible reactions from separatist forces in Europe, do the chances of chances of Donald Trump's victory brighten?
I'm not a political pundit.
You're not a political pundit, but just that financial markets will price this in, whether we like it or not.
No, as I said, there is a sequence of events that people seem to say are tied to this. I have no sense of whether that is real. And I don't think there's a one-to-one correspondence. People have tried to make the one-to-one correspondence between what happens in the UK and what happens in the US. I think it does sound a warning bell about the kind of anger that people have against the current system. But I at this point, I am not equipped to make any kind of assessment of the U.S. elections.
We are definitely better in our macros. You have spoken about it. The finance minister has spoken about it. Our low current account deficit and our war chest. But at times like these, how much of help is this if there is an avalanche of selling?
Look, I think money has to go somewhere. So yes, there may be outflows, but so long as we maintain our reputation for macro stability, so long as our policies are moving forward, for example, with the GST, for example, with the Monetary Policy Committee, and we reassure international investors, I think that they look at us, they look at the prospects for growth, they look at the kind of current account deficit we have, look at our reserves, and they basically should be reassured that broadly we're moving in the right direction. So in that sense, one would hope that after any initial reactions, any initial consequences of risk-off, money sort of returns. And certainly we have plenty of buffers for risk-off moods.
What's your message to the financial markets? They're all listening to you now.
Well, message is quite simply that, yes, the adjustment will take place. Yes, there will be, a reassessment of prospects for certain kinds of assets. But in any kind of market volatility, there's always opportunity also. And as the initial turmoil settles down, I think one has to look for where the opportunities are. But I'm not going to give any investment advice. I have none of my own.
No, but did you see it coming?
No, I think that many of us felt that the kind of confidence the polls had that we were moving towards Remain was perhaps overinterpreted, given how much we've seen in the past, a surprise element, especially when it divides across the electorate so sharply that there was a sense that the youth were more prone to remain while the elderly were more prone to exit. And then it depended a lot on who went to the polls on the right day. So again, without going into punditry on polls, which I have no expertise in, I think we at the Reserve Bank, certainly in our discussions, were quite prepared for this possibility.
Well, if you did see it coming, Governor, ought you not have postponed that letter of yours to your staff announcing your exit?
Once again, I think I can't answer that question, so let me leave it there.
Okay, haven't you got a call from Delhi to reconsider?
I don't want to go into those areas. Let me. I think we've sort of run out of the issues on the Brexit. So let me thank you. And I actually have to.
All right, Governor. Thank you very much for joining us with your thoughts on Brexit and on the likely fallout.